Happy Wednesday out there, folks. This is Darius Dale here to present our macro minute for Wednesday, August 31st, 2022. Month end here. So we're heading into September. We're going to get a big ramp up in the pace of quantitative tightening. Going to get some very critical economic updates, starting with Friday. We get the jobs report. On the 13th, we get the CPI report. And then obviously on the 21st, the Fed FOMC meeting. So it's going to be a big month of macro. If you haven't had enough macro, you're going to get a little bit more. So starting with asset markets, we have stocks up this morning, commodities down, crypto up, dollar flat, global bond yields up, market moving headlines. So we trudge deeper into phase three. We've been talking about phase three in the program. If you don't know what phase three is by now, just go check out our recent macro minutes. So Loretta Mester, Cleveland Fed president, reinforced the message that the Fed has more to do, saying the risk of recession over the next 2 years has risen, and she does not anticipate any rate cuts in 2023. This is a Federal Reserve that seems to be unanimous in its deliberate intent to slow the economy down, to wean it off some of the inflationary pressures that we obviously are seeing reported in the system. Number two, ADP says payrolls growth is back around the pre-COVID trend. So U.S. companies added 132,000 jobs in August, according to ADP, falling well short of expectations for a $300,000 gain and slowing sharply from a $270,000 increase in July. The series returned after months-long hiatus with a new methodology and more high-frequency labor market data, as well as median annual pay growth metrics. Those who changed jobs experienced a 16.1% pay increase in August of 2021 year over year, more than twice the 7.6% gain for those who stayed at their jobs. Oh, by the way, neither of those numbers are consistent with the Fed's 2% inflation mandate. Recall that the report had been on pause since the May release, and the ADP emphasized that this new approach moves the data away from trying to forecast the government's payroll figures. So a lot of times, and I've certainly wasted a lot of time in my career trying to build a model to forecast non-farm payrolls using the ADP data. The standard error on any model you're going to build is way too wide to forecast with any precision. And so they're finally coming out and just admitting that this is not the best read for non-farm payrolls. But again, the directional trends in the time series tend to be very correlated. So pay attention to trends in the data. Anyway, Europe's inflation situation deteriorates further. So Euro area inflation accelerated to another all-time high, strengthening the case for the ECB to consider a jumbo 75 basis point rate hike next week. I believe they meet on Thursday. Joachim Nagel urged a strong reaction from his fellow policymakers and said more rate hikes will come in the following months. So CPI across the block accelerated to an all-time high of 9.1% in August, accelerated to an all-time high of 4.3% on core. And then Italian inflation also posted a fresh record of 9%. We saw France ease off a little bit to 6.5%. Yesterday, we had Spain's inflation data ease a little bit to 10.3%, but we also saw the increase in German inflation to 8.5%. So on a net basis, the Eurozone seeing a continued acceleration in inflation. And then lastly, we got some mixed growth data out of China, but the trend continues lower. So Chinese factory activity was a tad better than expected in August, but the manufacturing PMI remained below the critical level of 50 for the second month at 49.4. The non-manufacturing gauge slipped less than forecast to 52.6, dragging down the composite gauge to a 3-month low of 51.7. So China continues to shoot itself in the foot with zero COVID. You're also having power outages and things like that that are weighing on the Chinese growth dynamic as well at the current juncture. Big movers this morning. MSCI Emerging Market Index up 1%, is now down 1% month over month. NASDAQ up 1% to down 4% month over month. So I thought that was interesting that we're seeing EM outperform a little bit relative to U.S. equities, which obviously got bid up throughout the month of July and August. Bitcoin up 2% this morning to down 15% month over month. I hope you didn't chase the highs there. And then Ethereum up 2% today to down 7% month over month. Shifting gears to our volatility adjusted momentum signals and probable ranges. U.S. dollar bullish FAMs, not quite overbought, but getting there. Gold bearish FAMs, not quite oversold, but getting there. 10-year nominal treasury yield, we talked about that yesterday, bringing back out the bullish FAMs, not quite overbought, but getting there. High yield credit spreads, bullish FAMs, we are overbought here. S&P 500 bullish FAMs, we are oversold here. But I'm expecting a transition to neutral FAMs, and I'll tell you why in one slide. VIX bearish FAMs, that's overbought this morning. Got the neutral FAMs transition in the NASDAQ. which is still technically oversold or getting near oversold, but certainly we had a little cup of coffee in bullish VAMS territory, failed to hold. Obviously, as we, again, trudging deeper into phase three of U.S. monetary policy, it's going to affect the rate tension of the duration sensitive NASDAQ more forcefully at the outset than it will the Russell 2000 S&P, which should catch down to the NASDAQ in the coming days. To our opinion, that we're not going to see the end of this pullback until it becomes consensus, till phase three becomes consensus. And phase three is characterized by tighter for longer from a U.S. monetary policy standpoint. Russell 2000 anyway, bullish FAMs, that's oversold. But again, I still think they're headed lower over the next few days, maybe a couple weeks, at least until we get the August CPI data on the 13th, which may, in fact, lend some credence to the transitory view. We're not quite sure which way it's going to come, because obviously we're seeing some record dynamism in some of these inflation prints. We talked about that obviously in 42 Mac research in the last few weeks. But if we get incremental credence on the transitory view, then the market can go back towards pricing in something that looked like phase two. But again, if we do not get that, then phase three is going to get a whole hell of a lot worse. So I think there's some very binary risk here in asset markets, but generally speaking, the liquidity cycle conditions remain quite unfavorable for speculating things like Bitcoin, which is bearish FAMs, kind of in the middle of its range here. Ethereum bearish FAMs also in the middle of its range. Shanghai Composite bullish FAMs not quite oversold, almost there. WTI crude oil middle of the range there. Neutral FAMs. Ag bearish FAMs not quite overbought, but getting there. Industrial metals bearish FAMs, that is nearly about 2% downside, 6% upside. So with that, Darius Dale presenting our macro minute for Wednesday, August 31st, 2022. Best of luck out there today.